All right, good morning and happy Friday. What's going on, everyone? Give me a quick sound check here in the chat if you can. And today is the first quarterly expiration of the year. The big bad OpEx. I found the quarterly expiration, they can be a little bit weird. You'll get a big flush, a big pop, a lot of back and forth. So I'm kind of thinking a bit more into next week. Get through today's expiration, see where the dust settles, and then we'll take it from there. All right, good morning, good morning. All right, let me clean things up here a bit. And we'll take a look at the futures and move on from there. All right, so the futures. S&P futures are flat. The RUT is flat. You got the YM futures up about 0.1%, and the NQ down about 0.1%. So all in all, pretty quiet. A little bit of back and forth. And we did have a nice push here going this morning. The benefit of waking up early, every now and then you might catch a nice push. So price came all the way up into the falling hourly 50. And so far, that's pretty good resistance. But I did play it long through the 5-minute squeeze. Really clean setup. Come on now. Yeah, so this beauty back here. Five-minute squeeze, 5-minute buy signal. So I got long around 52.17. And I took that all the way into that hourly 50 around 52.28-ish. 52.29. Which as of now looks like a pretty good exit. But what I did want to show you guys here, let me throw on the trailing stop. So when it comes to the futures trade, my whole goal is, amongst other things, how quickly can I get a break-even trade? Or a free trade, so to say. So what I like to do is throw on the trailing stop here. And the settings that I use are a factor of 9, or a period rather of 9, and then a factor of 2.4, and average type is exponential. And then you can change the colors as you see fit. But check this out. So got the trailing stop up here now. And this morning when I jump in around that 52.17, so I got long on that candle right there. What I'm looking for is if that squeeze can fire quickly, I want to see that trailing stop shift up to my break-even point. All right, so I'm buying it back here on that candle. We get a little push going, and then that trailing stop moves up to my break-even. At which point I move my stop up pretty much to the trailing stop. And then it's a stress-free trade. Worst case scenario, the squeeze breaks structure. Price takes out that trailing stop, and I'm getting out of there for break even. Best case scenario, they ride that trailing stop, they ride that 21 EMA all the way up there towards that upside target. So that made for a good trade, and as it currently sits here, checking out the squeezes and the signals. Big three signals are pretty quiet. The 4-hour, the 2-hour, and the 1-hour are neutral. We do have a 30-minute buy signal and a 5-minute sell signal. Not what I would call a lot of clarity. And then for the 1-hour squeeze, it's one thing to have a squeeze. We need the clarity to call for direction. So if we take the 1-hour squeeze here on the S&P futures, I can't call for a long or a short. 1-hour chart itself is neutral. The 30-minute is neutral. The 15-minute is neutral. And the 5-minute has a sell signal. If we have an hourly squeeze above the 21 EMA, and from the 5-minute chart up to the 1-hour, we're cranking out the buy signal, Doesn't mean the trade works, doesn't mean the squeeze fires to the upside, but I can call for direction. If we're under that 21 EMA, and from the 5-minute chart up to the hourly chart, we've got nothing but sell signals. Doesn't mean the squeeze breaks short, but it does make it a little easier to call for direction. So as much as I love the squeeze, I really want to avoid getting long or short inside of a squeeze when things are neutral. Then it all just kind of it all kind of tends to be a chop fest. So S&P futures a little quiet, and then jumping over to the NQ here, we'll check the signals and the squeezes. All right, Squeezola. For a lower time frame, we have a 4-hour squeeze and a 1-hour. The 1-hour squeeze is neutral. Every time frame inside of it is also neutral. Could fire short, could fire long. To me, doesn't feel like an A+ moment in time. That'd look a bit more like back here. We had an hourly squeeze. The hourly chart itself had a buy signal. And your 30, the 15-minute, the 5-minute, even the 2-minute and the 1-minute, they also had a buy signal. Doesn't mean it works every time, but the probabilities are a little bit more in your favor. So everything's pretty quiet there. And then we'll jump over to the cash market, SPX and QQQ. And let's see. All right, so one thing I do notice here on the cash, and let me clean up the drawing set. And it could change today for better or worse. But if anything, just some signs of exhaustion. If you look down here at the momentum histogram, as a general statement, momentum's going lower. So think of that like the gas tank. We're kind of losing gas here. And despite that, they continue to take the price higher. Down goes momentum, and up goes the price. It becomes a question of sustainability. If they can't turn momentum back to the upside, how long can they continue to take the price higher? Especially given the fact on your weekly chart, your monthly chart, we're pretty overbought. And then on the big three signals, you can see a little bit of that exhaustion where the green candle turns into a blue candle, meaning the signals have gone from bullish to neutral. In a normal situation, not a big deal. I think potentially it could be a big deal, when we're up here at weekly 3 ATR and we're all the way up here at that monthly 3 ATR extension. So a couple signs of exhaustion, and then for a squeeze here, I think the next, call it meaningful move, whether it be for a long or a short, I think it'll likely come from that 4-hour squeeze. And it's a brand new squeeze, so you want to give it a little time to develop. But it's more of the same problem here, guys. I've got half the equation. I've got the compression. How can I call for a long or a short out of that 4-hour squeeze? 4-hour chart itself is neutral. And then for the most part, every time frame inside of it is also neutral. In my book, it doesn't make for a great long. It doesn't make for a great short. Until you get a bit more clarity, it makes for a really good chop fest. But I do think today and then into next week, you really want to watch that 4-hour squeeze. As we know, they can pack a punch, long or short. So we'll keep an eye on that one today. And then on the QQQ, we've got a lot more squeezes. So this one's a little bit more interesting, where you have a daily squeeze, a 4-hour, a 2-hour, a 1-hour, a 30, and the 15. Could change today. If I had the call for direction right now, I couldn't call for a long. 4 hours neutral. The 1-hour, 30-minute, and the 15-minute, they've got a sell signal. Again, not a guarantee the 4-hour squeeze breaks short. But if anything, they can't take it to the upside with all those sell signals. So keep an eye on both of those. And then quick look here at the IWM. a little bit uglier. It's also got a 4-hour squeeze. You're taking out the 4-hour 50. And on every time frame inside of it, you got the sell signal. A little more pressure there in the small caps. And then last but not least, or maybe least, the Dow Jones, also in a 4-hour squeeze. Also, for the most part, pretty neutral. But I think you want to make that your major focus. Anytime all of the indices are in a 4-hour squeeze, could be a pretty big move on the other end. So there's the futures and the cash products. One more thing here on the futures for crude oil, dash CL. Let me clean things up here a bit. But I continue to like that daily squeeze here. A mighty fine looking daily squeeze. So what I did yesterday was, let me get rid of those. So I bought some calls here. All right, calls on the futures on Wednesday. And then I flipped them out yesterday morning for about 100% profit. Now, this is something I'm trying to do a lot more of. I got a good entry. I caught the initial push. However, everything still points towards there could be plenty of upside left. You got buy signals. You got a daily squeeze. Right, still hasn't fired. You have a 2-day squeeze. You got a weekly squeeze. So what I'm doing here is I'm taking that $1,000 of profit off the table. I took about $250 of the profit, and I rolled it out into a further call. I bought the 81 strike call, flipped it out for a double, made my $1,000. Then I'm taking about 25% of that profit. And because I think there's still potential for higher prices, I'm taking that $250, going a little bit further out to expiration, going a little bit further out the money, and I bought the 83 strike call. I think doing that puts me in the perfect position. Worst case scenario, all right, on trade number 1, I make my 1,000 buckaroos. And then on trade number 2, I'm risking about $250. Worst case scenario, trade number 2 just craps the bed. I end up taking a max loss. Between the 2 trades, I'm going to have a net profit of $750. I might lose the 250, but I'm not going to lose as a general statement. No matter what, it'll be a profitable endeavor. Now, best case scenario, let me get the Analyze tab here. By Monday, for example, come Monday, crude's pushing up here towards 83, 84 bucks. I might pull another 500 to $1,000 out of that trade. And again, I'm doing that because I think the squeeze still has potential. If we were all the way up here at that 3 ATR target, if the squeeze already fired, I'd probably just take the profits and call it a day. But what I'm trying to do is put myself in a position where I'm catching the easy initial push. I'm booking those profits, and then putting myself in a position where, regardless of what happens from here, I'm not going to be stressed out. I'm not going to get back all my profits. I'm either going to make a little bit more. Potentially, I'll double my profit, or it falls apart, and I'm going to move on to my $750 to $800. As I'm trying to grow this smaller futures account, I think I started off at about 9,000. I'm sitting at about 12,000 and change. That's been really helpful. And admittedly, I think I could do an even better job of that. But yeah, keep an eye on crude here. If you're into that kind of thing, if they can take out yesterday's high, and it'd be pretty cool if they could do it today. I think you're looking for 83 to about 84 bucks. If that squeeze fires, any oil-related stocks, I think they should do pretty well. All right, so that is that. And then a few things we saw yesterday. Kind of the central theme right now is there's plenty of things that look good in the market, not too many of them offer a really good entry. I think a prime example would be the energy sector. Good old XLE. Beautiful push out of that daily squeeze. We've got a fresh weekly squeeze and a weekly buy signal. So there's that slingshot signal doing its job. We get the blue arrow in the squeeze. The blue arrow down here on the histogram. That's your first heads up. The first heads up that sometime soon, they might trigger the official buy signal, the green arrow. If they can trigger the green arrow, they might want to take it into that upside target. I think the real story here for energy, though, and again, I prefer to buy it on a pullback, but we'll see how that goes. But I think the real story here is going to be that monthly squeeze, and not in a straight shot, right? Not by next weekend, but I do think sometime this year that might want to take energy towards that $100 level. So energy is not really a thing I can trade right now, but I do think based on that weekly and that monthly squeeze, could be some potential there. Now, for a few things I might be able to trade, I think maybe as early as next week, a couple of the semiconductor stocks. Start off here with SMH. It's not a tradable setup for me just yet, but the good news is we've pulled back to a 21 EMA. We're kind of back here at home base. We'll see how today goes. If the SMH can just generally chop around and trade sideways near that daily 21 EMA, we might get ourselves a brand new daily squeeze, which I happen to think could be a beautiful thing. Even if we don't get the squeeze, which I think is to our benefit, you want to view that daily 21 EMA like a launching pad, like one of Elon Musk's rockets. In an uptrend, you get a big push away from your 21. You pull back to the launching pad. Another push to the upside. Pull back to the launching pad. Another push to the upside. Now, my preferences are back there at that 21 EMA, and we have a daily squeeze. But at a minimum, if they can take it down into that daily mean, and then the 5-minute, the 15, the 30-minute, the 1 hour, all of your lower time frames crank out that buy signal, that could trigger a push right back towards the highs. And then for a few of the semi stocks here, AMD, back home to the 21 EMA. I've got it where I want it. Doesn't mean I have a trade just yet. I don't have a daily squeeze. Even if I did, I don't have a trigger to buy it on any lower time frame. Actually, I got the opposite. 2 hour, 1 hour, 30-minute, 15-minute sell signal that says pump the brakes here, Junior. You don't got to get long just yet. Above that 21, nothing but buy signals makes for a good long. Below that 21 with nothing but sell signals in a normal market makes for a bit more of a short. And it looks like AMD's down about 2 buckaroos here this morning. There is Broadcom. Again, not an active idea, but I'm showing you these to say, hey, they've pulled back. They've been incredibly strong all year. Look for a setup, look for a trigger. Take it day by day. So SMH, Broadcom, AMD, AMAT, and LRCX. Now, here's the thing. In my opinion, these are all the smaller semis. Like AMD, Broadcom, AMAT. They're your little guys. And then you've got the one and only, the big dog, NVIDIA. And NVIDIA's 21 EMA is down here about 825-ish, which would be about $60 to $70 below yesterday's close. Point being, if NVIDIA is the king, if that pulls back towards 21 EMA, we should expect a little bit more pressure in AMD, Broadcom, LRCX, meaning they might break under their 21. And it looks like NVIDIA is going to open up down about $4 this morning, which in the grand scheme of things is not all that much. And then we'll take a look here at the SMCI. A few of you might have heard of this one. We're up here at 1130 with our 21 EMA about $50 lower. The point I'm trying to make, don't rush into buying AMD. Signals on NVIDIA and SMCI point towards they might want to pull back a little bit more. That'd be my thinking. NVIDIA pulls back a bit, SMCI pulls back a bit. I'd think everything in the semiconductors should do the same. So a few things to watch there. And then for the tech stocks, like we talked about yesterday, it's a little bit of a mixed bag. Couple names look awful. An Apple, a Tesla, and then a few names look really good. Mainly Microsoft. Big breakout yesterday. You got that slingshot squeeze setting up. It's a question of, does Microsoft have the wind at its back? Can the QQQ keep pushing? Can Amazon keep pushing? Can Meta keep pushing? All on its own, I think Microsoft has everything it needs for a push up here towards 430-ish. Big squeeze. Bunch of buy signals. If the QQQ craps to bed, it makes it really tough for Microsoft to continue to push higher. So I think it'll be a bit more of a QQQ thing than a Microsoft thing. But as far as tech goes, I think that's the best looking setup right now. And then the worst would be a tie between Apple and Tesla. They tie. Apple down here under the daily 50, under the daily 200, under the daily 21. And like I mentioned yesterday, if they can't pop it hard and quick, I think they might want to take it down to about 165-ish. We've got some previous support down there, and the 3-day has that 200 SMA. So Apple is troublesome, and then Tesla. Pretty nasty. Pretty nasty indeed. And I think the biggest thing here for Tesla has got to be that monthly squeeze. And if we approach that monthly squeeze at that multi-time frame point of view, every single time frame inside of that monthly squeeze says that thing wants to break short. Doesn't mean that's going to be the outcome, but probabilities-wise, that's how things are shaping up for now. Under the monthly 21, under the monthly 50. If we pop open the hood here, the weekly, the 3-day, the 2-day, the daily, the 4, the 2, the 1 hour, the 30-minute, everything inside that monthly squeeze, spitting out that sell signal. So I'm not going to be surprised if sometime soon we see a test of that big 150 level. And if we get down there, guys, I think 150 is going to be a make or break kind of level. Now, the monthly squeeze target would be about $65. And I'm not here to claim Tesla's going down to 65. I know that sounds a little bit aggressive. But one thing I've learned is don't question the squeeze. If we're back in April or May of last year, and we're looking at that monthly squeeze in the S&Ps, back in April and May, maybe a little tough to think the monthly squeeze takes us up another $1,100. We're back here around $4,000. But here we are. It all worked as advertised. But all right, guys, there's the futures, the cash products, the semiconductors, energy, and a quick look at a couple of the tech giants. And then again, I think if you want to focus on one thing and one thing only, 4-hour squeezes on the S&Ps, the QQQ, the Dow Jones, and the IWM. I guess that's 4 things to focus on. Do they fire long or short today? Maybe not. Right? It's quarterly expiration. Might be a little bit funky out there today, but I do think into next week, you make that your major focus. Whether the next meaningful move is a move higher or a move lower, I think a pretty safe bet, it'll come from one of those 4-hour squeezes. Watch that 4-hour time frame, and then your confirmation comes from all of your lower time frames. All right, and therefore this morning, I've got nothing in the form of confirmation. Lower time frame signals looking like a little bit of a graveyard. But all right, my friends, any questions, anything y'all want to take a look at? We'll hang out here for a few minutes, and then I am going to the gym with my wife. Today is arm day. But if we're being real, every day is arm day. And then I'm looking forward to next week. There's been a few decent trades this week, right? Couple decent lower time frame squeezes, but it does feel a little bit like the market is trapped. So after today, when all the options expire, we might have the freedom to roam about the cabin next week. I am very much looking forward to it. All right, let me just check up on the futures here. 52.13 S&Ps. Little pop here in crude. And you got the NQ leading the way lower. And the rut is trying to save the world. Hey, good morning, Georgia. Good morning, good morning. Yeah, thanks for coming through, guys. We had a vote in my master yesterday, and it was a unanimous decision that we'll do these prep sessions every day of the week. Same time, same channel. All right, LMT, and then your question above. So I'll take a look here at LMT first. Okay, LMT on the 4-hour time frame. All right, really, really good question. So the question here is we got LMT on the 4-hour chart. We've got an A+ setup. However, we're below that 200 SMA. So the question is, how can it be an A+ setup if we're under the 200 SMA? Now, to your credit, that's we got to have a little bit of discretion with our A+ setups. If you showed me a 4-hour squeeze above the 200, that looked just like LMT, and then one that's under the 200, I'm always going to lean towards the one above that 200 SMA. All right, that'll improve the big 3 score. It'll make things a little bit more bullish. What I found was in some markets, when you break under the 200 SMA, it can take a long time to get back above it. And underneath it, there can still be some really nice moves. So great question. I think in this instance, it's a bit more of a context thing. Not the same example, but kind of along the same lines. I'm taking that 5-minute squeeze in the futures this morning. But the context was, I don't have the best looking hourly chart. Therefore, I can't buy that 5-minute squeeze and then go hit the beach all day. All right, down here, my 5-minute chart is perfect. My hourly chart, a little bit more iffy. We're under the 21 EMA, we're under the 50. So the context for that trade is great looking 5-minute squeeze, but that 5-minute squeeze might run directly into some hourly resistance. I marked up that 21 EMA. All right, we blew through it. I marked up that 50, and then at that 50, I took my profits, thinking, all right, I got a good push. The 5-minute squeeze did its job, but it's taking me directly into falling resistance. Not a situation where I want to be greedy and look for a little bit more. So going back here to LMT, I would still take the 4-hour squeeze, but the context would be, all right, cool. The context would be up there at 441, 442. I might want to be ready to take my profits. The 4-hour squeeze might start the party. The party might end at that 4-hour 200. I'm going to mark that level up. I'm going to throw some alerts up there. If we get there, really got to pay attention. So great question, and I hope that makes sense. A little bit more context. We're under the daily 50. We're under the daily 200. So no doubt, if everything's above the 21, above the 50, above the 200, I think those make for easier trades. The squeeze fires, you're not going to fight a big level of resistance. That's an awesome question. Tony, happy Friday, Tony. Amazon. The Zon, as they call her. So you might have a few squeezes on the original squeeze or the Squeeze Pro. I've got nothing here on the big 3 squeeze. For those of y'all that don't know, the difference between the squeeze, right, the original squeeze, the Squeeze Pro, and the big 3 squeeze, the compression settings are a little bit different. If you're familiar with the Squeeze Pro, on the Squeeze Pro, you have your low compression squeeze, you have the mid compression squeeze, and then you have the high compression squeeze. The big 3 squeeze basically splits the low compression and the mid compression. And I happen to think that's kind of the sweet spot. We're not going to get them as early as a low compression, but we're going to get them a little bit quicker than the mid compression. Kind of like Goldilocks and the 3 Bears. This is just right. Not too hot, not too cold. The perfect temperature for my porridge. Yeah, so the criteria for the A+ setup. I'm going to get my notepad up here. There's my to-do list for today. But A+ setup equals 1. Squeeze printing. 2. Big 3 buy or sell signal. And then 3, a good risk reward entry near the 21 EMA. All the momentum criteria, all the structure criteria comes together. That can give us a buy or a sell signal. I always got to get a squeeze. I need that compression. Those 2 things come together at one time, and I've got a good entry. In my book, that's an A+ setup. And like I think we saw with the LMT example, there is a little bit of discretion required. Some A+ setups are a little cleaner than others, but at a basic level, those are the 3 things I'm always looking for. So therefore, if you go back to the energy sector, and we pull up the weekly chart here, how come that beautiful weekly squeeze is not an A+ setup? I've got the squeeze printing. I've got the big 3 buy signal printing. I don't have a great entry near my 21 EMA. Compare that to an LMT on the 4-hour chart. Down goes Frazier. Down goes Frazier. But compare that to LMT on the 4-hour. I've got the squeeze. I've got the active buy signal. And I can buy that right near that 21 EMA. Those 1, 2, 3 things come together at once. Then we got ourselves an A+ setup. All right, guys, the market is a little bit slippery here. A bit of a slippery goose. NQ down a third, S&P's down a third. Now, what about on the bear side? How come the current 1 hour squeeze is not an A+ setup? I've got an active squeeze. I've got an active sell signal. We're too far from the 21 EMA. We're too far from the 21, and we're too close to my downside target, which would imply in most situations, if I short it right here, my risk reward is kind of going to suck. I short the thing at 52.02. I might catch another $4 into my downside target, or I might take a $20 rally right on the chin. Could I make that work? I could, if I've got a 95% win rate. Now think of the opposite. If I can short it somewhere up here, now I'm risking maybe $5 or $6 to catch that full 15 to 20. So we got to get those 3 things at once: a squeeze, an active signal, and a good entry. All right, y'all, what do you think? Do you think they hold that 5,200? What are we thinking here? Do we hold or fold? Do we boom or do we bust? Okay, my rule of thumb for choosing the options on the futures. So in terms of the strike selection, when I'm taking that squeeze focus trade, like we'll take the 1 hour squeeze here, for example. Had I gotten a good entry, if my target calls for 5,200, I'm going to buy the put somewhere in that neighborhood. Maybe not quite at 5,200, but maybe a couple of strikes higher where I can buy the put while it's out the money. And then if the squeeze fires, it all works as advertised. That put can go from out the money to in the money. If I think that move can happen today, I might go with the 0 day till expiration. The problem with that is I buy the put up here. The futures spend another 2 or 3 hours in the squeeze, at which point my put is down 40, 50, 60% just because of that premium decay. A lot of times going 1 day out to expiration gives you a little bit more breathing room as far as the faded decay. But at the same time, I'm buying it out the money. It might end up in the money. If it all works, I'm still going to get a really good bang for my buck. Woo! She breaking, folks. She breaking. But yeah, good question there. All right, my friends, a couple more questions, and then I am off to the gymnasium with the wifey. Al, good morning, Al. S-O-U-N. All right, let's take a peek. What do we got here? Right, no daily squeeze. We're not down here at that 21 EMA. So for me, I can't view that as my traditional swing trade setup. However, I can acknowledge the fact this thing's really bullish. 10 out of 10. I got buy signals. We got good structure. We're above that trailing stop. So it might not be my classic daily squeeze entry. But if the path of least resistance remains to the upside, where I can find a good entry is somewhere on a 30-minute, 15-minute, or a 5-minute squeeze. I can pick my spot for an entry at a lower time frame squeeze. I can manage my risk on a lower time frame squeeze. And then, hey, if they want to take this from $9 to 10 to 11 to 12 to 13, not all of them, but a lot of your lower time frame squeezes, they should continue to fire to the upside. So for those of you that are in the essentials room, over here at Simpler, you saw JC, Johnny Carter. He did that a few times here on SMCI. No daily squeeze, nowhere near the 21 EMA, but my God, is this thing strong. Sit back, wait for a 30-minute squeeze, jump in, then to catch that continuation. And if you can do that on an intraday basis, you can basically wake up every morning, look for that lower time frame squeeze, continue to take them until they no longer work. So things like that. But all right, y'all, I'm going to hit the road here. As always, thank you for all your time this week. Really, really appreciate it. For those of you in the mastery, we're live tomorrow morning for our weekend prep session. And then, like I said, things are breaking down pretty good here right now. It is quarterly expiration, which is a general statement, just has room for what I would call a lot of shenanigans. Whole lot of shenanigans. So be disciplined today. And then I think the major things to watch here, 4-hour squeezes on the SPX, the QQQ, the Dow Jones, and the IWM. They may not fire today. They will fire sometime soon, and I think that'll be our next meaningful directional move. So keep an eye on all of that. For those of you in the mastery, if anything pops up today for a great trade, I shall get it posted. Otherwise, y'all have a great afternoon. Have a great weekend. Be safe, and I'll talk to you very soon. Adios.